Palantir Technologies fourth quarter 2025 earnings call. Apologies for a little scene hiccup. We are here, Martyn Lucas investor, and Vaz, and we're gonna have a look. We are just waiting. We just had the closing bell. Thank you for joining me. Just closing on the closing bell, we have slight spike in the price. We had gradually through the day, we had gradual sell-off just so we could gain this nice green candle to the closing bell. We are waiting. We are literally a few minutes away from getting the numbers. So let's get back to the main studio and check if everything is working. Let's see who is here. If you have any questions, don't forget to fire them away. And I will see you in a few seconds in the main studio. Okay, I'm having technical issues here. Right, let's try this one. Okay, my apologies, I'm having some technical issues. Let's get it fixed on the go, on the fly. Nothing we couldn't deal with. That's fine. Let me just get rid of this, and I think I've got it sorted. So thank you very much for joining me for Palantir Technologies fourth quarter 2025 earnings call. Let me just quickly check if everything is coming through. I've got I've got a checkmate Pavlik joining me. Nazdar, vole. Thank you. We are waiting for the numbers to come through. Let me know in the chat if you have any questions. We will do a bit of analysis, bit of deep dive as well. I've got my show notes ready for you. So in a minute or so, we will move back into the analyst room and we will talk about the actual earnings and what we can expect. In the meantime, we are running a poll in the chat. What do you expect? Is Palantir going to beat, miss, or are you undecided? Please cast your votes in the poll. The more people vote, the better sentiment and consensus we can get of the investors, of our audience who follow us. We are so far, it looks very optimistic with our audience. We have a massive beat, and the numbers are out. So let's have a look. Palantir Technologies. Let me put this on this camera. Palantir Technologies fourth quarter revenue 141 billion. So that is more than was expected. The consensus was, bear with me, got in my notes. The consensus or the estimates were 1.34 billion. So we have quite good beat. And look at the reaction. Look at the stock go. Well, let's go to the analyst room and see what we can gauge from this reaction. We have a massive completely off the scale candle. So let me just zoom this out, sorry, and join me in the analyst room right now. There we are. I'm hopeful everything is working well. As you can see, massive green candle, massive reaction on the closing bell. We were closing, I think 147 something, and now look at it. Look at the green candle. It keeps growing. It keeps going up, up, up. Why is this? Well, we had a massive, fairly good. I mean, you see the reaction. We had very good beat on the revenue. So why is this important? Because Palantir, obviously, there has been a lot of pressure on the price per earning. The earnings per share ratio. Why is this important? Well, in the for Palantir this quarter, the conversation is no longer about whether the company can deliver. It's about whether earnings and income growth can be sustained at scale and at today's valuation, which you can just see Palantir have just proven it. And the price keeps going up. The price keeps going up. Now we are sitting at $159.93. That is great. I think I might have to zoom out a bit and move the chart because soon we will literally be off the charts. Let's just start this story. Let's just unveil this story. Third quarter, there was a lot of pressure and a lot of stress on the income and earnings per share delivery. Let's anchor this with last quarter. In third quarter, Palantir delivered approximately 1.18 billion in revenue, representing roughly 63% year-over-year growth. On earnings and adjusted earnings per share came at 21 cents positive. 21 cents positive, beating expectations of around 17 cents. So we had a fairly good beat, and we have won again today. So third quarter was a clear beat on both income and earnings per share. We know that earnings per share for Palantir was showing very overvalued. So now what the third quarter established? That quarter established two important baselines. First, Palantir can deliver billion-dollar quarterly revenue. And second, profitability is no longer theoretical. Earnings per share is now consistently positive. From that point on, the bar moved higher. What Palantir guided for fourth quarter? If you have any questions, fire them away in the chat. I will come back into the main studio and I will talk to you very shortly. Let's just go through this story. Let's see what guidance and what news we've got from Palantir, and let's just unveil this story one step at a time. So what Palantir guided for fourth quarter? Coming out of third quarter, management guided for fourth quarter revenue in the range of 1.327 to 1.331 billion. And we had a beat. We had a 1.41 revenue. That implies continued growth of roughly 60 to 61%. Now it will be slightly higher year over year. Palantir keeps sitting up there. That's great. That's some great news. So that implies continued growth of roughly 60 to 61% year over year. On earnings, the guidance effectively signaled continued profitability. And those who covered the earnings with us last quarter, namely with me, I remember that they showed that massive spike in and build up and ramp up in the profitability projection as well. So the market, what the market expected for fourth quarter. Today, analyst consensus was looking at roughly 1.34 billion in revenue for fourth quarter. And we already know we beat by 70 million, give or take. On earnings per share, expectations are around or were around $0.23 positive. A modest setup from last quarter, 21 cents positive. That tells you something important. The market is not expecting acceleration, it's expecting consistency with Palantir. Why earnings per share and income must be viewed together? Just stand by with me. I've got a few more notes to address, and then we'll move back to the main studio and we'll go through the numbers and break them down. Why earnings per share and income must be viewed together? At this stage, you cannot look at earnings per share in isolation, obviously. Earnings quality depends on income quality, and that is the main pivotal point of this earnings call. The question is whether AI-driven commercial growth can keep pushing revenue higher without sacrificing margins. And that is the sustainability test. There is also one big test for this quarter for Palantir as well. Can they sustain profitability and revenue from the private and commercial sector rather than the government sector? And this was a big test, big stress test for this quarter as well. Valuation context, just a few more lines. We will go back to the main studio and we will break down the numbers in detail. Valuation context. At Palantir's current valuation, these numbers are already priced in. So we know that already from what we said before. Delivering 1.34 billion in revenue and 0.23 positive in earnings per share is expected. We know we have a beat. We had a very good reaction on when the numbers came out. We had a gradual sell-off all the way through the day, and now we have a nice, massive green candle. But what moves the stock is confidence that this level can be repeated quarter after quarter. This will put a lot of pressure on Palantir for first quarter of this year, of 2026. However, let's see the guidance. We know from the third quarter, the projected revenue income, the revenue was very, very parabolic curve. So let's see what guidance they can offer to us. So for the closing thoughts, third quarter proved that Palantir could execute. Fourth quarter is about proving that execution is now the baseline. This quarter isn't about upside surprise, it's about durability. And I've got a few notes here about beat or miss, but we already know, so let's just not, it's already spoiled. So thank you very much for standing by with me. Let's now get back to the main studio. I will address your questions and comments in the chat. We will probably put up a new poll as well. We will close the old one and we will break down the numbers and the guidance we have from Palantir. There we are, back in the studio. Let's just get on the screen. There we go. So first of all, let me close the poll. We had 52 votes. That's good. That's a good specimen, considering that the show is just overlapping with Martyn's show. Martyn is running the main show. He's had a guest, Lou. What's his name? Lou Valentino, I forgot his name, who hopefully he's not watching. Lou Valentino was his exclusive guest. It was round 2 of yesterday's Little Clash. I loved it. I loved the show personally. And today's show was even better because it wasn't so emotional. It was more settled. It was more placid and more conversational, if you will. So let's just quickly have a look at the chat and we will break down the numbers and have a look. Let me close this poll. Right. Let me just know if the audio is coming through okay. I've been having some issues with audio on my previous events, but that should be all fixed. So let's quickly address your questions and comments in chat. Pavlik is here. I love it. Thank you for joining. By the way, if you are new to this show, well, even if you are not new to this show, definitely don't forget to hit the like button. And if you are new to this, consider subscription as well, because so far we've covered majority of Palantir earnings. We dedicate some content to Palantir customers as well. So if you are here for Palantir, you can follow us and see their product in action as well. Martyn is sending links. Sir Joey is here. Liz is here. I love it. Ganja, Vaz, how are you doing, brother? I'm excited. We had some very good numbers coming from Palantir. Let's just have a look at this. We are now sitting at $1.58. We are still sitting at the higher level. That's great. Let's just do it this way so everyone can see the screen. $1.58.59. This is great. So, and I think we have Donald Trump as well. Wow, what a day today. What a day. Martyn is still running his parallel stream with me, and we might get Sensei live to it as well. So what a day. What a day for broadcast. I love it. I love it. That's how we do it. Organized chaos. Liz, are we live? Yes, we are live. And I'm seeing bigger audience coming in. Thank you very much for joining me. Palantir Technologies, fourth quarter 2025 earnings call. I've got everything on standby. We are quickly catching up with the chat and appreciating everyone joining. So if you have any questions, fire them away in the chat. And in few minutes, literally in a minute or so, we will be looking at the numbers from Palantir. Let me just refresh this quickly. If we have, yes, we have the guidance, we have presentation. So give us a minute and we will go through it very shortly. Liz is here. Thank you very much for joining. Sir Joey, listening on 2x speed to get up to speed. I love it. Martyn sent me. Very good. Very good. I see we are getting audience from Martyn. I love it. As I said again, we are covering Palantir Technologies fourth quarter 2025 earnings call. Thank you for the appreciation of the audio. That's great. Poll is not working. Okay, that's probably because I closed it. Let's create a new poll. Let's see if we have any investors. Let me quickly create this poll. Are you invested in PLTR, Palantir Technologies? Technologies. Let's not do any typos. Right, let's do long term. And I would like you to join this this poll because we would like to see who are our audience, and if you are investors, if you are traders, or if you are not interested. Long term trading. What was the other one? Not invested. Considering as well. Considering. Right, you have four options: long term, trading, not invested, and considering. Please take part in the poll because it's very important, not only for me but for you as well. There'll be more polls as we go. I see your votes already coming through. That's great. I want a Martyn send me. That's great. I love it. Okay, well, let's have a look at this. We've got a presentation coming through, and we will do it from the analyst room. So it will be more interesting to me as well, rather and to you. Currently, Palantir sitting high up there. Have a look. Palantir has been sitting high up there at the level of $158, just above $158. This is great. This is looking very good for Palantir. Let's just quickly get this up and running. Presentation. This is amazing. I love it. I love how everything is so flawless. Right, let's get this up and running. Change the scenes as we should, in the manner we should do it. Right, main camera. Let's get back to the analyst room and break down the actual earnings numbers. There we are. Palantir fourth quarter 2025 business update from Alex Karp himself. The earnings call is about to start in next, it's not very professional, is it? In next 38, 39 minutes. Palantir, they usually start on time, and their presentation, their earnings call, the actual webcast is very high class. It's usually video. Alex Carp, it gets emotional as well. Let's see. Last earnings, the third quarter was fairly tame, I would say, for Alex. The previous ones are very emotional, very, very excited. So let's see. Let's see what guidance and what sentiment or what emotions are we gonna get from the CEO. So business update. Let's have a look together. We have some disclaimer, obviously. A rule of 40 enterprise software. Those who covered the earnings call with us last quarter, Palantir was somewhere here. So they are moving higher up. That's great. You have comparison to the market peers as well. Definitely Alex Carp will explain what this is about. So let's just move on to the numbers. US revenue grew 39% year over year. That is massive. Last quarter was about 70%. This is massive. And 22% quarter over quarter to 1.08 billion. So out of those 1.41 billion, majority, 75%, give or take, just quick maths, was coming from the United States. US commercial revenue grew 137% year over year and 28% quarter over quarter to 507 million. US government revenue grew 66% year over year and 17% quarter over quarter. That's a mouthful to say that. Quarter over quarter. And I'm seeing I'm not in the right scene. Now, there we go. Apologies for that. The studio is still, the paint is still fresh. I need to get the muscle memory kicking in. So, apologies for that, but I believe you could see it on the screen anyway. So the US government revenue, 17% quarter over quarter, up to 570 million. That's good. That's some good numbers. Revenue grew 70% year over year and 19% quarter over quarter to 1.41 billion. So as we said before, we had a very good beat. We beat for about 70-80 million dollars. That's great. A rule of 40 score 127. Alex Carp will be explaining this. He always explains it on every quarter because this is Palantir's strong discipline. They want to sell it. They will explain what's going on. Closed 180 deals of at least 1 million and 84 deals of at least 5 million, 61 deals of at least 10 million. So again, the numbers are up compared to the previous quarter. I can bring them up later. I've got a third quarter here presentation as well, so we can have a look and compare. But let's just quickly get to the bottom of the story. The stock in the meantime, the stock price in the meantime, let's have, what did I have? Let's do it this way. The stock price in the meantime, this will be the quickest way how to track the stock price. Palantir currently up over. It broke through that $158 mark, and now we are touching 160. That's massive. That's a massive impulse after the closing bell. We are 8% up, as you can see, after the closing bell. That's great. So let's get back to the guidance and numbers. Adjusted operating income 798 million, 57% margin. Good. I believe the margin has gone down a bit. If I remember right, last quarter it was closer to 60%. So definitely, I want to hear from Alex any comments on this. US commercial remained deal value RDV grew 145% year over year and 21% quarter over quarter to 4.38 billion. Highest ever quarter of commercial total contract value to 1.34 billion. That's a growth 67% year over year. No doubt, Alex Kapp will give us more guidance to it. He always does. He always likes to explain these numbers. So let's wait for that. We are about 33 minutes from the actual earnings call. If you have just joined, don't forget to hit the like button. If you are new to this program, and if you are following Palantir, please do consider subscription, because we've covered most of the, or if not every Palantir earnings, but we also cover Palantir customers. And I will get back to that later. Adjusted earnings per share 0.25 and GAAP earnings per share 24. So again, we have a beat. It's not massive, but we have a beat. Financial year 2025 highlights. US revenue grew 75%, and this is big. This is big number. US commercial revenue, and this is the most important thing for Palantir, was in the spotlight for this quarter. Palantir need to focus on the US commercial revenue. They cannot rely on US government contracts solely. So this is great. This is great news. 109%. This is massive news for Palantir. Revenue grew 56% year over year. Again, great number, in line with the guidance, to 4.48 billion. And do we have a margin? We don't have a margin on this line. That's fine. 59% year over year, excluding strategic commercial contracts. Rule of 40, score 106. Again, Alex will explain this. He always does on the earnings call. Adjusted free cash flow, 2.27 billion, 51% margin. 51% margin. Amazing. That's a massive number. I wish I had business that operates on 51% margin. Adjusted operating income, 2.25 billion on the 50% margin. TCV of 10.8 billion, growth of 128% year over year. Adjusted earnings per share for the year 2025, 75 cents positive, and GAAP earnings per share 63 cents. 7.2 billion in cash equivalents, and short-term US Treasury securities. No doubt Alex will explain this as well. We have stories. We have the actual stories. We don't have only numbers. We have stories as well. So Palantir, and again, we will hear more on this. Palantir are rebuilding American sea power. Palantir and the United States Navy launched ShipOS to deploy Foundry and AIP across America's maritime industrial base, replacing decades of delays and cost overruns with on-time delivery and maritime dominance. Palantir doing what they know the best, building operation systems, processing data, and working with it. That's great. Turning warfighters into AI builders. The American Tech Fellowship trains builders with unconventional resumes on AIP through a rigorous 12-week program. After 2 successful cohorts, we are launching the American Tech Fellowship of Veterans, ATFV. We'll definitely hear from Alex about this as well. Exclusively for veterans, active duty service members, and reservists. This program will turn battlefield experience into the technical firepower America needs to win the AI age. Great, so far it looks very good. So far I'm liking this. Palantir and Accenture launch partnership to scale enterprise AI. The new partnership will deploy Palantir's forward deployed engineers alongside more than 2,000 Palantir skilled Accenture professionals to accelerate AIP deployment across healthcare, telecommunications, manufacturing, consumer goods, and financial services. Very interesting. Very interesting. We'll definitely hear from Alex more on these stories. Definitely. Palantir, NHD, Hyundai. Hopefully I'm saying that right. Expand Group. Sorry, Hyundai Expand Group, group-wide partnership. Building on years of successful deployments, HD Hyundai is now scaling foundry and AIP across shipbuilding, refineries, construction equipment, robotics, and electric systems in Palantir's largest and longest partnership in Korea. Very good. We have more customers. Introducing Chain Reaction, the OS for American AI infrastructure. We are launching Chain Reaction to deliver battle-proven software to the critical actors powering AI infrastructure. We know that Palantir, from the last earnings, they very proudly presented their involvement in the nuclear power market as well. So this could be part of this as well. Energy producers, grid operators, infrastructure builders, and data centers. We have more to unfold. At DevCon 3, we announced AI FDE. At DevCon 4, our customers share their breakthroughs. I definitely want to hear more from Alex. We have a video as well. Let's have a look at that video later. We also launched new AIP tools that will transform how customers build, deploy, and scale production applications. So we are focusing on workflow builders, agents and ontology, MCP, ontology-backed app building, and provider API proxy. Again, there is a video. We have a bit of time. We can have a look into that. Let me know in the chat. Are you liking the numbers? Are you enjoying what you are seeing? Because so far, I'm just processing it, and it's all good news, all good information so far. So where is the catch? Supercharging data migration with AIP. Traditional data migrations trap organizations in expensive, multi-year cycles of soiled workflows and validation failures. AIP maintains unified context across the entire cycle while deploying specialized AI at every stage. Impact: generate comprehensive migration plans in 60 seconds, begin execution on day one with continuous validation throughout, and complete migration in weeks instead of years. Wow, at a fraction of the cost. So Palantir just doing what they know the best. Financials, finally, let's have a look at some numbers. Financials. So as we already seen, 137 massive year-over-year US commercial revenue. And I dare say, this is the most important figure for this quarter Palantir can show in their presentation. US commercial revenue, quarter over quarter, we have a big growth and sustainable growth as well. US commercial customer count, we have new customers as well. Almost 50% year over year and 8% from previous quarter. So again, this is a good signal for the investor, and this is the value Palantir are putting against the price tag of their stock share price. US commercial remaining deal value plus 147% year over year. US commercial deals closed of 1 million or greater. We are multiplying by the factor of 1.7, and US commercial total contract value 1.34 billion. That's some good numbers. Gap income. You can see quarter over quarter, the curve is very, very straight. There's no deviation, no massive deviation. So this is again good numbers for Palantir. I keep saying Archer, I don't know why. Well, I know why, but fourth quarter GAAP operating margin 41%. Again, massive number. massive number. I think the industry peers, they operate between 25 and 30%, but don't quote me on this. I might be mixing it up with other values. Again, you can see very steady curve. The operating income is actually going slightly steeper up compared to the previous quarter or the previous periods. Rule of 40, again, I want Alex to explain this because he always does it on the earnings call and he would do a much better job than I would have. US revenue grew 93% year over year and 22% quarter over quarter, driven by acceleration in US commercial and US government. So again, you can compare later to the previous quarter. You will see it's sort of in guidance. It's on track to what we could see the last quarter. We are about 22 minutes away from the actual earnings call, from the actual webcast. Stand by, don't go anywhere. It'll be very visual, it'll be very high quality as well. It might be very emotional. US commercial revenue growth, we are up 137% year over year, and we are up with the government growth 66%. As I said, this is probably the most valuable figure for this earnings. So Palantir can prove they are not relying only on the government contracts. Although they're up, they are growing. This can slow down. This can slow down in future. Not the commercial and private sector. That is the key number for Palantir for this quarter. Commercial revenue growth, again 82%, and government revenue growth 60% up year over year. Total revenue grew 70% year over year and 19% quarter over quarter. Massive numbers, massive growth. Total revenue, excluding strategic commercial contracts, grew 72% year over year and 19% quarter over quarter. And Palantir also say, we continue to invest aggressively in AIP and the US while driving operating leverage at scale. Again, we have numbers. Fourth quarter adjusted operating income, 798 million, representing a margin of 58%. That is a massive number. And you can see comparison to the previous quarters. So third quarter, 51%. That's not adjusted. Oh, that is adjusted. Do we have we don't have unadjusted. Okay, so that is adjusted 51%. Beg your pardon. 46% second quarter, 45, respectively 44% the previous two quarters. So you can see the margin is gradually and maybe even fairly aggressively coming up. So that's great. Do we have any guidance? We haven't seen any guidance, but we will hear guidance from Alex, from the CEO and probably the Chief Financial Officer on the call as well. We are about 20 minutes away. Palantir usually start on time, so stand by. We'll be joining the CEO and the team in about 20 minutes. US commercial customer count. You can see the growth as well. You can see how much 13%, 12%, 9%, 8%. They might be slowing down a bit. And that's why I said the US commercial sector will be the key stream of revenue for Palantir going forward. Although it's slowing down, the growth is slowing down. You can see the numbers. They are going up, up, up. Customer count, again, that's what we want to see for Palantir. 8%, 10%, 7%, 5% growth. And for the commercial sector, 9, 11, 7, and 5%. And we are just going up. And year over year, it adds up to 37% new customers. 180 deals. How about that? Of at least 1 million That's just the fourth quarter 2025. 84 of which were at least 5 million, and 61 of the minimal value of $10 million. Great numbers so far. Fourth quarter, the position of 7.2 billion in cash equivalents, and US Treasury securities, and no debt. Cash from operations and adjusted free cash flow. That's what I was calling for before. I was looking for before. I was calling out the margin. You can see 56% margin last year of this period, and for cash operations and adjusted free cash flow, 63, 56% margin. But look at the numbers. Palantir are just delivering very good numbers today. Here's the guidance. We got to it finally. First quarter 2026, Palantir expecting 1.532 to 1.536 billion. We are expecting growth, massive growth. Well, a massive number. Probably not as massive, but it's gradually going up. Adjusted income from operations of between 870 to 874 million. Financial year 26. For full year 2026, we expect revenue between 7.187 to 7.198 billion. So again, we are going up, up, up. US commercial revenue in excess of 3.144 billion, representing a growth rate of at least 115%. Again, this is the key figure for this quarter. If Palantir can sustain this, they can deliver finally value to the price tag of their share price. Adjusted income from operations between 4.126 and 4.124 billion. Adjusted free cash flow of between 3.925 billion and 4.125 billion. GAAP operating income and net income in each quarter of this year. Okay, we have some more numbers. We have the numbers here in the table. We will look into that. We'll cover this on the call. I'll put it on the screen and I will zoom in. As the revenue comparison, basically all the tables you could see, all the charts, they are here in the tables. Reconciliation of Rule of 40. Again, we'll look into that deeper on the call. Cash flow from operating activities. We have a breakdown. You can see just going higher and higher. Let's have a look what Palantir is doing. Let's have a look at the stock price. Palantir sitting back again, 158, bouncing slightly up and down. But you can see very good reaction on the earnings, on the numbers coming out. We are about 7% up now. That's great. Reconciliation of gross profit and to adjusted gross profit and adjusted gross margin. You can see the numbers yourself. Quite big progress as well. What else? Income from operations. Again, you can see the growth from fourth quarter 2 years back. It was only 11 millions, and now we are up. We are up to, from fourth quarter 2024, and we are now up to over $500 million. So massive growth with Palantir. Reconciliation of GAAP earnings per share diluted to adjusted earnings per share. So this is the value we are looking at, 25 cents and 75 cents respectively for the financial year 2025. What else we've got here to offer? Reconciliation of revenue to billings. Okay, revenue is going up, billings obviously as well, but you can see here this is in black numbers, it's not in red numbers. The change in contract liabilities, so that means Palantir are profitable on their contracts. And last slide from the presentation, reconciliation of cost of revenue and total operating expenses to adjusted expenses. Total expenses, obviously the company is growing, so but I don't think they are massively growing. If you look at that fourth quarter of previous year and fourth quarter of last year, we are only, what, 15 million up. So that's not a massive change. Quite good. And the previous quarter, we have a slight growth, but that could be caused by the upscaling of the business. Stock-based compensation going down actually compared to the previous quarter of 2024, and we've got employer payroll taxes related to stock-based compensation. Again, I will leave it to you if this number is relative to you as an investor or not. Okay, thank you very much for bearing with me. We are 13 minutes or maybe 12 minutes away from the actual webcast, so let's get back to the main studio and let's see what is your reaction in the chat as well. Right, we are back. Let me know in the chat, did you like the numbers and did you like the presentation from Palantir? Let me know in the chat. We also are running a poll in the chat. Let me do it this way. We are running a poll in the chat. Are you invested in Palantir Technologies, long-term, trading, not interested, and considering? I don't think we have enough votes. We have less votes than people watching. So if you don't mind, join us in the poll. It's fairly interesting and important to the audience as well, because at least you can see what specimen of our audience of what specimen of the investor biotope. Oh dear, I'm just going into free spin. What specimen of the investor biotope we have in here, and then we can share our knowledge and we can share our experience and our feelings as well. So it's only for your own benefit as well. And also I'm learning from you. So let's just quickly go through the chat. Where did we take off? Okay, we got the influx from Martyn's show. Did you enjoy Martyn's show? Did you enjoy Louis Valentino? I think it was a good one. Yesterday it was very emotional. It was a bit of drama. Today it was very tame. I loved it. I loved it today. I couldn't obviously watch the end because we were starting with this show, but yeah, that's great. I think Sensei might be covering the other event. Let me just quickly check if Sensei is covering this or not. Martyn is covering. Okay, we have some good news, because we can run multiple events at the same time, and we are now pretty much as live TV. You can choose your program, you can see the topic, you can watch the topic you like. Martyn is now watching Donald Trump. He's delivering. Oh, he's delivering a message. Okay, I think that's ending. I think that stream is ending, Martyn said. Okay, well, let's leave this for now. Let's get back to Palantir. Let's quickly cast through the chat messages we have. Let's put up the stock chart on the screen as well. There we go. We are all set. Palantir currently sitting at $158.43. So we had this big green candle, and now we seem to be sitting at the level of $158, which is very good. Let me just acknowledge this to Martin. Okay, so did you like the guidance? Let's quickly go through chat. Did you like the guidance? Did you like the numbers? Bitcoin Craig is here. That's great. Chris Valuable. D Fahi, am I saying that right? Hey up everyone. I love it. Steven is here. Our oil man, oil baron. Javi is here. Kimberly. Everyone is here. Everyone is here in the chat. Terry Rose. Overtaker. I want to, okay, I don't understand this. Yes, I'm invested in Palantir and go involved in May 2025. What is your average? You know what? Let me know in the chat. Don't tell me how much money you spend on Palantir. Let me know your average. I'm very interested. Every single earnings call we are covering, I'm intrigued. What is our investors' average? So let me know in the chat, what is your average? Martin sent me, says Paul D. Love it. Yes, I'm invested in Palantir and got involved in May 25. Great, congratulations. You were buying on the way up. You weren't buying at the spike in May. That's good. Yes, I have like 2K invested, says Sir Joey, into it. Probably going to sell once I hit my break even. Okay. Well, good luck. You might hit it tonight. I don't know. What is your average? Let me know what is your average. I made a few bucks, but I can't stand this company and what it does. Speaking on Palantir. Why is that? The Gets Say Ray. Why is that? Why you don't like Palantir? Is it because of the CEO or because of the product, or why is it? Let me know. We are 7 minutes away from the actual webcast, from the actual earnings call. We are 7 minutes away. Let me just quickly check something. Yes, that is... No, bear with me. I'm with you very, very shortly. Just switch this. I'm monitoring quite a few things at the same time. So bear with me. That is not coming through. Okay, that's fine. So back to the chat. Let's see what is moving in. Look at the chart. Yes, yes, Liz. Massive green candle. I love it. We are up, what, 8% now? 7. We are just above 7% up. That's great. Steven is not invested. He's scalp trading. Good. You are doing great, says Pavlik Diki. Thank you for watching. I love it. Another checkmate. Another checkmate on the list. I love it. I love it. Okay, let's just quickly... Okay, this is now talking to me. Let's just quickly see what's going on. Okay, that is still coming through. Donald Trump is still talking. Donald Trump is still talking. So alternatively, if you want to see, if you want to join Martin, let me just put this in the chat. Once that event ends, Martin will send you back. So, or you can just dip in and say, Vas sent me, and come back, obviously. Please. I will put a link. I'll put a link in the chat as well. Donald Trump live. Oh, hang on. I need to do it here. Oh, bear with me. Bear with me. Bear with me. We are doing it live. Vas sent me. Shut up, Vas. We are doing everything live. This is the magic of the show. Oh, and I've just deleted my copied link. Okay, please bear with me. I'm copying too many things at the same time. Okay, share. There we go. Donald Trump live. There. Nope. Okay, let's copy this again. Let's copy this again. Let me show you the screen what I'm doing, so you can watch me how numpty I am sometimes. Okay, there we go. So that is Donald Trump speaking live. If you want to check it out, if you want to dip in and say to Martin, Vas send me, and then obviously come back, yeah? Then obviously come back. We are 4 minutes away. We are 4 minutes away from the Palantir earnings call. I am monitoring it for notifications on. We are, yeah, did I say 7? Sorry, I meant 3 minutes. 3 minutes away from the actual earnings call. Palantir usually start on time and they deliver a bit of emotion as well on top of it. So, thank you, Pavlik. I love it. Another checkmate in the club. Great job, Vaz. I love the show. Don't forget to give a like, folks. Yes. D. Fahi. Am I saying that right? Or Fahi? Fahi. Yes, thank you for reminding me. Don't forget to hit the like button and obviously subscribe as well. We are having very good audience considering Martyn has got almost 800 people watching. We are still holding good. Ooh, we are getting even more people. Well, guys, looking at the numbers, people watching, just hit the like button, yeah? Just hit the like button. Okay. Great job, Vaz. Love the show. Thank you. Don't forget to like. Yes. This way, Dead Gaming is here. Last December, Palantir was 195 close today. Yes, Palantir. On the last quarter, we covered it. Third quarter, 2025. That was back in, was it end of November? Or was it December? Early December. I covered this earnings call. And Palantir hit the all-time high just to sell off, just to crash another 15% in the next 2 days. So, yeah, and we haven't recovered from that yet. Trump at shutdown. Yes, Liz. Yes. Okay, do we have any? Hello from Scotland, says Stu. I love it. I'm in East Cambridgeshire. I'm in England, so we are not so far away. We are at least on the same time zone, if you will. Do we have any 75 average, Pavlik? Woo! Lucky you. Congratulations. I am a advisor. Am I saying that right? Just shorted at 159.49. Well, you are still making money, but I would be careful with shorting, especially in this market. Palantir webcast is about to start. The actual event has just started. I'm waiting for the audio to come through. So let's just quickly catch up with the chat. We are watching the chart. The price is sitting. You can't see it now, can you? The price is sitting at $1.58. You know what? I forgot. That's the. I've got new toy. My analyst room. And I forgot completely that I've got this old toy called Trading View, which I can actually show you live on the screen. And it might be worthwhile to show you Palantir as well. Palantir Technologies, and we can watch the stock price developing live. That's much better, Vaz. I like it. That's it. That's much better. Okay, so let me just... Am I showing it? Yes, I'm showing it. Okay, that's good. There's a lot of things I need to focus on. I need to coordinate. The muscle memory has not built up yet. So thank you for standing by and respecting it. Let me just quickly check if we are coming through. I think we are coming through. There's a faint background noise. There's a faint background noise. Let me just quickly check it.
I'm Anna Saro from Palantir's Finance.
There we go.
And I'd like to welcome you to our fourth quarter 2025 earnings call. We'll be discussing the results announced in our press release issued after the market closed.
So I will get quiet. We will have the presentation on the screen. We'll be tracking the stock price live. Whatever you want to think of. Let me know in the chat if you want anything, if you want me to bring up anything, if you want me to focus on anything. I will address your questions and requests. And now I'll just shut up and let's get on with the call.
Subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our fourth quarter results are nothing short of historic, capping off a monumental year for our business. In Q4, overall revenue surged 70% year over year, our highest growth rate as a public company, propelled by the relentless momentum of our U.S. business, which now commands 77% of our total revenue, up 93% year over year and 22% sequentially. Our Rule of 40 score reached new heights at 127, up 46 points year over year and 13 points quarter over quarter, proving that hypergrowth and exceptional profitability aren't mutually exclusive, but rather the inevitable outcome of Palantir delivering transformational impact at scale. We closed our highest TCV quarter ever at $4.3 billion, and fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer, a testament to our customers' conviction. Our customers aren't tentatively trying AI, they're committing to it at scale with Palantir as the driving force. The rapid advancement of AI models is continuing to drive the commoditization of cognition. The next step is for the market to differentiate between those who are supplying the commoditization of cognition and those who are scaling the leverage made possible by it. We are the only enterprise software company that made a conscious choice to focus exclusively on the latter, delivering real-world value for our customers by maximally leveraging these models in production. Palantir is an N of 1. This is what makes a Rule of 127 possible. This is why customers who've crossed the chasm with Palantir, the AI haves, are defining the future of their industries, while those still on the other side, the AI have-nots, are fighting for survival in the present. As Johnson Controls noted about our work together, quote, "It is really incredible to see that you can transform a 140-year-old company with the power of AI." I'm seeing this play out across our customer base. We are moving customers from AI adopters to AI native enterprises, transforming execution into exponential advantage. This is summed up best by an executive at Thomas Cavanagh Construction who noted, quote, "We've gone all in so much so that every other software must justify its existence. And so far, they haven't been able to. 97% of our employees use Foundry every day. Foundry is our operating system." And he continued, quote, "The ontology is the secret weapon. Nothing else comes close. And not only are we getting rid of third-party software, we've replaced their functionality and then beaten them to new features all within the year because of the ontology." Our U.S. commercial business grew 137% year over year and 28% sequentially, building on the blistering pace of 121% year over year in Q3 and 93% year over year growth in Q2, defying conventional enterprise software dynamics. This isn't just growth, it's compounding acceleration. AIP continues to fundamentally transform how quickly our customers realize value, collapsing the time from initial engagement to transformational impact. Lear noted at our recent DevCon conference their experience starting with 100 users and 4 use cases and growing to 16,000 users and 280 use cases. We're seeing the effects across our entire customer base. Existing customers are expanding faster and larger. For example, a utility company expanded from $7 million ACV in Q1 2025 to $31 million ACV by year-end, while an energy company expanded from $4 million ACV in Q1 2025 to over $20 million ACV by year-end, driven by value generated from new use cases. In addition, new customers are starting with substantial initial deals. A healthcare company completed 2 boot camps with us last summer and signed a $96 million deal with us before the end of the year. An engineering services company saw a series of demos in the fall, then signed an $80 million deal before year-end. Speed to production and transformational scale is no longer optional. It's existential. Palantir remains the only platform delivering that speed at enterprise scale. This revolution isn't limited to just companies. It extends to countries, with the U.S. leading the way. Our U.S. government business grew 66% year over year and 17% sequentially, driven by our mission impact.
You can see we have new audience coming in from the previous event. We are now covering Palantir Technologies Q4 2025. We have some good numbers, so let's just listen in. We'll break it down after the webcast ends.
Shipbuilding supply chain and accelerate delivery of naval vessels. This engagement exemplifies how Palantir's supply chain expertise, honed across commercial and defense customers, is now being deployed to solve some of the most strategically important challenges facing our nation, including rebuilding its maritime industrial base. The strength of our U.S. government results reflects a fundamental reality. In an era of intensifying global threats and budgetary pressure, the government is turning to software that actually works as speed, precision, and decision advantage are paramount. We're entering 2026 with extremely strong footing. Everything we've built over 2 decades is converging into this moment, and we're charging into the year with unmatched conviction as the defining enterprise software company of this generation. I'll now turn it over to Shyam.
Thanks, Ryan. Our focus with AIP continues to be enterprise autonomy, our normative view of the value of AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed-loop evolution of the business with AI, possible because of AIP and ontology. The HiveMind framework is being applied to broader problem sets. We used HiveMind to generate a bespoke AIP demo for a specific customer based only on their website and other public information. The company's CTO was blown away by how good the demo fit their internal challenges, even though it was only based on information in the public domain. HiveMind is just that good. We're going to continue to invest in closing the loop between HiveMind's output and the autonomous execution of these ideas at our customers. AIFD continues to delight. AIFD is now capable of powering complex SAP ERP migrations from ECC to S4. Years of work now done in as little as 2 weeks. And we are generalizing AIFD's capabilities to do this for a broader and broader set of problems at our customers. AIFD and OSDK has unleashed pro-code builders in our platforms. We serve over 1 billion API gateway requests a week from applications built by our customers on top of AIP with OSDK. Maven usage is at all-time highs, supporting simultaneous real-world events across combatant commands in the Joint Force. Maven will continue to be rolled out to all combatant commands and many more networks over the rest of this government fiscal year. But Maven is also pushing to the edge. We completed a live-fire exercise with Maven coordinating with UAV assets through our new Maven Edge agent called Mage, enabling the declarative statement of mission intent and fully onboard planning, reaction to emergent battlefield realities, and execution. AIP is becoming the default builder platform in the Department of War. Uniformed service members, primes, federally funded research and development centers, all in Maven, Vantage, Envision, Warp Core, and more, all building, not just consuming, AI applications. We're seeing green suiters and blue suiters building their own agent swarms to transform how they fight. As with any good revolution, the innovation is coming from the edge, not the program offices. It's the E4 in Hawaii, the E8 in South Carolina. These are the folks pathfinding how AI is transforming the Joint Force with every code commit they make. Gotham's new suite of integrated capabilities, platformed on Foundry, met their moment. Kairos for integrated planning and sync matrices, Nexus for dynamic command relationships and unit task hierarchies, and Workbench to automate collections, fires, and battle damage assessment. These aren't 3 standalone capabilities. There are 3 new dimensions of the prism that turn battlefield complexity into lethality. They all work together, building on each other. Warp Speed continued to build momentum across American industry. ShipOS was the most significant development in Q4, rolling out Warp Speed to accelerate submarine production and sustainment across shipbuilders, shipyards, and critical suppliers. At one shipbuilder, we took planning from 160 hours of effort to 10 minutes. At a shipyard, we took material review from weeks to less than an hour. But most exciting to me is proving what we always believed to be true, that AI will create jobs. This is Jevons paradox in action. By reducing the deadweight loss of time spent planning and ensuring the availability of materials, one of our customers was able to add a third shift, because now there was more work waiting to be done that was shovel-ready and executable. We've been so impressed with the latent talent in the submarine industrial base that we're launching an American Tech Fellowship exclusively for them later this month. This will be an 8-week course to upskill users at suppliers and shipyards so they can build their own AI applications, unleashing the profound domain expertise to accelerate the delivery of one of our military's most important capabilities.
Other warp speed wins, one customer, making a mature weapon system at full rate production, was able to improve root cause analysis coverage from less than 20% to over 99% in less than a week.
On the other end, a different customer making a brand new weapon system that is still constantly changing designs was able to see a 40x improvement in throughput with a production system that scales with the design velocity rather than breaking under it. With that, I'll turn it over to Dave to talk us through the numbers.
Thanks, Shyam. We had an exceptional fourth quarter with our Rule of 40 score increasing 13 points quarter over quarter to 127. In the fourth quarter, we generated our highest ever reported revenue growth rate of 70% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 3,400 basis point increase compared to the growth rate in Q4 of last year. Full year 2025 revenue grew 56% year over year. On the strength of our 2025 results, we are guiding a full year 2026 revenue of $7.190 billion at the midpoint, representing 61% growth year over year. We reached another billion-dollar milestone in the quarter, with revenue from our U.S. business surpassing $1 billion for the first time. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 93% year over year and 22% sequentially in the fourth quarter. Our U.S. commercial business grew 137% year over year and 28% sequentially, and our U.S. government business grew 66% year over year and 17% sequentially. We delivered these outstanding top-line results with expanding profitability. In the fourth quarter, we generated $798 million in adjusted operating income, representing a 57% margin and exceeding our prior guidance by 500 basis points. Full year 2025 adjusted operating income was $2.3 billion, representing a margin of 50%, an expansion of 1,100 basis points compared to 2024. We generated $2.3 billion in adjusted free cash flow for the full year, representing a 51% margin and 82% growth year over year. Turning to our global top-line results, fourth quarter revenue grew 70% year over year and 19% sequentially to $1.407 billion. Full year revenue grew 56% year over year to $4.475 billion. Fourth quarter U.S. revenue grew 93% year over year and 22% sequentially to $1.076 billion. Full year U.S. revenue grew 75% year over year to $3.320 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 72% year over year and 19% sequentially, and full year revenue grew 59% year over year. We closed our highest ever quarter of TCV bookings at $4.3 billion, up 138% year over year. This eclipses our prior highest quarter of TC bookings just last quarter by over $1.5 billion. Customer count grew 34% year over year and 5% sequentially to 954 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 82% year over year and 23% sequentially to $677 million. Full year commercial revenue grew 60% year over year to $2.073 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 86% year over year and 24% sequentially, and full year commercial revenue grew 65% year over year. We closed $2.6 billion in commercial TCV bookings in the fourth quarter, representing 161% growth year over year and 83% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Fourth quarter U.S. commercial revenue grew 137% year-over-year and 28% sequentially to $507 million. Full-year U.S. commercial revenue grew 109% year-over-year to $1.465 billion. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 142% year-over-year and 28% sequentially, and full-year U.S. commercial revenue grew 113% year-over-year. In the fourth quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 67% year-over-year. In 2025, we closed $4.3 billion of U.S. commercial TCV bookings, a 161% increase from last year, highlighting the accelerating demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year-over-year and 21% sequentially. Our U.S. commercial customer count grew to 571 customers, reflecting growth of 49% year-over-year and 8% sequentially. Fourth quarter international commercial revenue grew 8% year-over-year and 12% sequentially to $171 million. Full-year international commercial revenue grew 2% year-over-year to $608 million. In the fourth quarter, we closed $1.3 billion of international commercial TCV bookings, driven by long-term renewals that we signed with several long-standing international commercial customers. Revenue from strategic commercial contracts was $2.1 million for the quarter, representing 0.1% of overall revenue. We anticipate first quarter 2026 revenue from these contracts to between $1 and $3 million, compared to $5.1 million in the first quarter of 2025. We anticipate 2026 revenue from these contracts to be less than $7 million, or less than 0.1% of full-year revenue. Shifting to our government segment. Fourth quarter government revenue grew 60% year-over-year and 15% sequentially to $730 million. Full-year government revenue grew 53% year-over-year to $2.402 billion. Fourth quarter U.S. government revenue grew 66% year-over-year and 17% sequentially to $570 million. Full-year U.S. government revenue grew 55% year-over-year to $1.855 billion. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 43% year-over-year and 9% sequentially to $160 million, bolstered primarily by our continued work in the UK. Full-year international government revenue grew 47% year-over-year to $547 million. We closed our highest ever quarter of TCV bookings of $4.3 billion, up 138% year-over-year and 54% sequentially. On a dollar-weighted duration basis, TCV bookings grew 166% year-over-year. Net dollar retention was 139%, an increase of 500 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $11.2 billion in total remaining deal value, an increase of 105% year-over-year and 29% sequentially, and $4.2 billion in remaining performance obligations, an increase of 144% year-over-year and 62% sequentially. In the fourth quarter, we signed a few significant long-term renewals with long-standing international customers, which provided a tailwind to RPO growth. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and 84% for the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $798 million in the fourth quarter, representing an adjusted operating margin of 57%. Full-year adjusted income from operations was $2.254 billion, representing a 50% margin. Q4 adjusted expense was $608 million, up 5% sequentially and 34% year-over-year, primarily driven by our continued investment in AIP and elite technical hiring. Full-year adjusted expenses were $2.221 billion, up 28% year-over-year. We continue to expect expenses to increase in 2026 as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Fourth quarter GAAP operating income was $575 million, representing a 41% margin. Full year GAAP operating income was $1.414 billion, representing a 32% margin. Fourth quarter GAAP net income was $609 million, representing a 43% margin. Full year GAAP net income was $1.625 billion, representing a 36% margin. Fourth quarter stock-based compensation expense was $196 million, and equity-related employer payroll tax expense was $27 million. Full year stock-based compensation expense was $684 million, and equity-related employer payroll tax expense was $156 million. Fourth quarter GAAP earnings per share was 24 cents, and full year GAAP earnings per share was 63 cents. Fourth quarter adjusted earnings per share was 25 cents, and full year adjusted earnings per share was 75 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 127% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter, and our 10th consecutive quarter of an expanding Rule of 40 score. Our full year Rule of 40 score was 106%. With our 2026 revenue and adjusted operating income guidance, we are guiding to a Rule of 40 score of 118% for the full year. Turning to our cash flow. In the fourth quarter, we generated $777 million in cash from operations and $791 million in adjusted free cash flow, representing margins of 55% and 56% respectively. For the full year, we generated $2.13 billion in cash from operations and $2.27 billion in adjusted free cash flow, representing margins of 48% and 51% respectively. We ended the quarter with $7.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q1 2026, we expect revenue of between $1.532 and $1.536 billion, and adjusted income from operations of between $870 and $874 million. For full year 2026, we expect revenue of between $7.182 and $7.198 billion, U.S. commercial revenue in excess of $3.144 billion, representing a growth rate of at least 115%, adjusted income from operations of between $4.126 and $4.142 billion, adjusted free cash flow of between $3.925 and $4.125 billion, and GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, welcome to our earnings call, celebrating one of the truly iconic performances in the history of corporate performance or technology. Just to underscore some of the numbers that Glazer read in a kind of dry form, which is very hard to do. This company grew 93% in the U.S. We had an aggregate growth of 70. Yes, that's a 70 handle. We have a rule of 127, and we are guiding to 61% growth this year. Now, those results would be stellar, unusual, and sublime for a company that was in a much earlier stage of its development. But we have been doing this for quite a while, and you just cannot expect a company like ours to perform at anything like this level. At the beginning of last year, we were guiding to roughly in the 30%, which would be a stellar performance for a company. At the end of the year, we grew our company almost 20% in one quarter. If you were a company sitting in continental Europe or in Canada or in any other similarly situated country, and you grew your whole company 20% and you had a rule of 50, you would be one of the premier companies in your nation, if not in your continent. And we also did this while supporting in critical manner some of the most interesting, intricate, unusual operations that the U.S. government has been involved in, many of which we can't comment on, but were the highlight of last year and were highly motivating to all of us at Palantir. And so this really just raises the question, what do bombastic numbers like this mean? Because, if you're growing a company like ours at 40%, you would then say somehow this is tethered to a broader category, which is doing well. But with a rule of 127 and 70% aggregate growth, 93% growth in the U.S., you really have to look at this, and the numbers speak volumes that we are an N of one category of our own, and we are doing things unlike any other company has done, which has, of course, been confounding to people over the years because they said we were a services company when we were doing FDEs. They said that our products were somehow merely software. In fact, they are implementation and orchestration machines. And no one thought we'd be able to generate this kind of revenue while having an anemic and declining sales force. And this obviously has import for the world. And what does it mean for the world? Well, it means that, first of all, that the way in which we view value is obviously no longer relevant, that the bottom of the stack somehow is where the value is lessened, and the top of the stack, where we impregnate the world with AI, with ontology and FDE, and tribal knowledge as represented at this table, is actually where the value is created. And that value is so large and so disproportionate that you can create a company that seemingly is exploding in terms of growth and quality of growth. It also means the riff we've been saying for years, that it's chips and ontology, meaning investing purely in commodity products, LLMs that are not orchestrated. Of course, it not only ruins the unit economics of your business, but it also provides the market with a very distorted view of what value creation would mean, because obviously, if you're making revenue with no way of making profit because the cost of it is so high, that's not valuable. And obviously, if you're producing something that is the same thing everyone else is producing, it's obviously of de minimis or no value. So we've inverted the stack. We've proven that the investment in what we've done with small numbers can have disproportionate impact both on top and bottom line. And we've also seen, unfortunately, that there's a real hesitance to adopt these kind of products in the West outside of America. And the two places leading here are China and America. And what we're seeing in America is so widely divergent. And so the non-adopters, the have-nots, are hoping for a catch-up function. But these numbers are a breakout function. With these numbers, you have broken through to a new category. It is not the category. The basket of category of AI is actually meaningless. It's the basket of category of performant value creation with the tools we have at hand, of which AI is crucial. And to believe you can go and build companies without this is supremely dangerous. And we're going to see over the next year companies that adopt things that actually work. We know ontology, FDA, orchestration is explosive and revolutionary. And obviously, companies cannot be expected to perform at this level because this is truly historic. But how do you even perform at half this level is going to be a real question for tech companies and a real question for countries. Can we produce companies that are producing what we produce in a quarter in a year? And one of the things we've got to figure out in the West is how do we do this? And this is putting enormous political pressure on our institutions because obviously political leaders struggle with how do I provide value when there's a disproportionate have and have not. Now, in the Palantir version, the haves are the workers and the people that know how to actually use these products. And even the ground truth of this is so far away from what people intuitively believe. It's actually not the capitalists against the workers, it's the capitalists and the workers. But that's very confounding to political leaders. And it's confounding to structures that don't know how to adopt this and cultures that are not producing these kind of products. Last not least, these numbers are extraordinary because they're fully organic. They're not just organic because we don't do acquisitions. We don't do acquisitions because we are a thick, dense culture, which means you'd have to fit in. And we have the perfect excuse now of not being able to do them because no one has numbers like this and it would reduce our numbers to do acquisitions. But they're also fully organic in the sense that we have no intertwined economics. Palantir has direct relationships with our clients in defense, intel, and commercial clients. We are not co-investing. We are not investing in commodity products. The numbers are pure. The purity of the Palantir enterprise, and the courage of the enterprise. And we have lots of debates internally about what we should do, how we should do it, but from the beginning, we have stuck to our very strong values of expanding what we believe is the noble side of the West, which means being lethal on the front end, meaning outside against adversaries if necessary. Hopefully adversaries do not want to mess with us. And on the inside, meaning domestic institutions, intelligence institutions, essentially taking an incatenation of the Fourth Amendment, which is completely represented by our pipelining, foundry, and impregnating institutions with it so that every institution that uses our product is doing it within conformity of the law and the ethics of America, and hopefully a logical extension of those around the world. Thank you.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Jeff J., who asks, how are you thinking about your international business, and do you anticipate reacceleration in the near future, for instance, due to European rearmament?
Well, Shyam and Ryan should comment on this, but one of the big difficulties outside of America, including the allies, is, and again, as these numbers show, it's not how much you spend, it's with whom. And so we're currently, first of all, Palantir is in a unique position where we really don't have the bandwidth to do anything that's difficult outside of America. So, and as this learning curve goes on, it's more and more difficult to help people understand how to implement these things, and the demand in the U.S. is so great. But the core issue for our allies is going to be, can we get to a point where there's a clear recognition that you're going to have to buy products that are much, much more advanced than what is being built domestically? And that's complicated for them because they tend to want to buy products for themselves. But if you just go back to a wider frame, is this institution load-bearing? Is the purchasing structure of a European country actually allowed to bear the load of buying the best product? Can they understand the delta in a way that allows them to make a decision that might go against the narrow economics of their own country? And I think, unfortunately, what you see is you see in the Arab and non-Arab Middle East, so Arab countries in Israel, you see adoption, you see wide-scale adoption in China, and you see lack of adoption in Canada, Northern Europe, and in Europe in general. But the real difficulty for the world is, if Palantir is going to bear a lot of the weight of this work, we are scaling. I mean, Shyam should talk about this, but like the demands on our product in the U.S. government in defense and in civil are extraordinary. So, how do you in fact even justify moving into something that's more complicated is a real issue. And again, but the issue ends up being their issue more than our issue. I think one of the things you're going to see in Northern Europe, Canada, and other places is a real pressure to move to the left and right politically very far, because the way you deal with this, when you don't have an answer to a question, you come up with ideologies that make no sense, and you try to implement them. And then that's the pressure they're going to have. The pressure we're going to have as a company, as a country, is how do we actually service the demand at the unyielding level of quality that we demand from ourselves. And the bar at Palantir is not we're the best, it's that it's got to be magical. We're not in the business of delivering the best products, we're in the business of delivering magically projects that are magical on the front line. And we unfortunately can't talk about some of that, but we've seen that in the last year. Magical implementations that have actually changed how people view U.S. deterrence. Obviously, the primary heroes here are the warfighters, but the implementation orchestration, which Shyam and many, many people at Palantir have spent tireless nights working on, has actually changed what people are able to do. If you have any questions about this, you can actually go, if you speak or read French, go into the French newspapers. One of the countries that has the clearest idea of the problem is France. But they don't really know how to solve it because the solution involves buying American products, particularly Palantir.
Nothing to add to that. That's great.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. Can you hear me? So 2 questions as usual, one in the commercial side, the other one on defense. On the commercial side, the markets have already decided that 2026 is the show me story for AI. Have you seen that in the customers or software partners? Like, you talk about this, I think you call it hesitancy, but like over time you have talked about like this resistance from some corporates to implement AI the way you thought it was the right way. Have you seen a change on that dynamic? The other one is related to ship OS. Shipbuilding has not been the only thing that the Pentagon has struggled to ramp up. There is a major effort to reindustrialize the US, and especially the military-related stuff. But like, is there an opportunity to have like, I don't know, an ammo OS or a missile OS, and like where else we could see that applied?
So I would say our whole commercial go-to-market strategy is showing and actually delivering value impact to our customers directly as quickly as possible. And that's why we're seeing the stories of customers that are starting at larger sizes and expanding more quickly. We closed, in our overall business, we closed 61 deals over $10 million. That's because of the impact that we're delivering to customers. And the customers are, I'm having a lot of those conversations with those customers, and it's all because we're showing them what we can do with the software, and we're showing the impact, and we're the only one that's delivering that leveraged impact from the models with the ontology, with the FD, with our products in those organizations.
Again, you'd have to disambiguate America from
At
all other
Petrogay
markets.
Nikoro,
But in the American
3907
market,
has become a member.
we have inbounds where people have already seen proof points at other companies, and not on one use case. It'll be like migration of this kind of product, underwriting, a myriad of use cases. And the conversation 2 years ago was much more, I've heard you're kind of this weird thing that might be able to make it work. In general, the conversation now is, I've heard you made this work. I don't understand where you fit into a slot. The reality of Palantir is we're not a one-slot company. So it's like, if you want to view us, what people know us for is it will work, and it'll work really well, and it'll be very quick. And then, but a lot of our customers come now with, I know it'll work. What do I need to do to make this accelerate? And then on the end where it's like not as positive, it might be, I don't quite understand how this would work or why this would work. But there's a lot less of that, and quite frankly, we're in a much better position to shape who we work with than we've ever been. And part of what we're doing, quite frankly, is shaping who we work with. Because, like Ryan is sitting on one of the more interesting deployments, both technically and commercially. And the person running that deployment on their end, de facto, is the CEO. And they're very far in the weeds. And it's like, and they're like, they've reshaped their org to absorb our product. And like, we've never had anything like, and it's the same thing, Shams, you talk about this in the DoD, but it's not. One of the unusual things that unfortunately we can't talk about is also just how much we can shape what's going on under the hood, including like, how do you orchestrate something in a defense or civilian context? Now, it's not that we're the deciders, but it is the first time that we can help shape the footprint against which we execute. Not in all cases, but for the first time in many. And what we need to get done this year is to expand that. It's much more density of client base than volume. We're into transforming large institutions and then making a lot of money with them. It's very counterintuitive, but because of that, they see very deep alignment, and they're willing to listen to us when we say, yeah, we know that won't work. Like in the past, we had to show them it won't work. Now a lot of our conversations are, look, we know this won't work. Everyone thinks this will work. This is some BS that companies tell you. It's never going to work. If you want the event planning and the steak dinner, you can have that. And quite frankly, some companies are like, yeah, we have some part of our company that's not real. We'll use some other company that does event planning and steak dinners for that. And then we're part of the real part of the business.
And on defense and reindustrialization, obviously reindustrialization is something we've been talking about for the better part of 2 or 3 years now. It's something we're very focused on. It starts in defense, but I think it goes to pharmaceuticals, it goes to chain reaction, where we're helping build data centers. So like there's so much activity there that we're uniquely positioned to go after.
Sham's being overly modest. Sham's phone rings off the hook all day, and what they want from him is, how do I do this same thing across government? That's literally what's happening.
And that's what it is. Ship OS, of course, we're starting with the subfleet, but people are asking us to help with all sorts of different weapon systems, fighters, bombers, surface vessels, drones, weapons themselves, munitions. And it's a big area for us that spans not only the production of the weapon, but also sustainment of them. And if you think about lethality, the ability to deliver combat power, you need an integrated ability to do this from the factory floor to the foxhole. And Maven is a huge investment that has changed how we fight across the joint force on the foxhole side. And what we're doing that ShipOS is really the kernel of and is powered by Warp Speed is how we're going to reinvigorate the factory floor and provide an integrated view to the Pentagon through this.
Thank you. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Yeah, so great to see you again. And look, obviously a phenomenal quarter. My question is, does it feel like you're getting more and more of the budgets on the commercial as well as even on the government defense side, where you go in to do X and all of a sudden instead you're doing Y? Is that starting to happen now? You're just getting a bigger piece of these budgets when Palantir comes in?
Well, if you look at you look at our numbers very closely, what you will see is inexplicable growth in revenue, but not inexplicable growth in customers. And it's inexplicable growth in revenue because customers that are serious are putting a lot of their most important problems in our hands. And then the value creation, we're downstream from that, but the value creation is so large. So it's both, it's not just that you get more problems, it's that you solve them in a way that is determinative for the business, and then they pay you a lot more. And then there's also just this consensus, right or wrong, that the alternatives to us are not great. It's like, I'm constantly, before these calls, I get 50 texts, could you please be more modest? And it's an issue. But we struggle, we all struggle with something. But the thing is, I think the true answers to this, it's not like, I don't understand this false modesty of like, the customers we work with know that we know things other people don't. And we've been sticking to the way we do things for a long time. And now AI has just put gasoline on all this tribal knowledge we have in our products. And I would say, and then we're much better at actually, I wouldn't say being modest, but saying, you may be a customer or a country that's not getting this right now, like Western Europe. I'm very pro-Western Europe. I've been admonishing Germany in German to like wake up because I care, not for commercial reasons. But the reality is most people there they're not ready. So it's like we're in a position to say, yes, you understand what we can do, and this is how it would work. The best examples are in all the stuff Shyam is doing and other people are doing in government, which cannot be talked about. But the initial discussions are like, well, how would you shape the problem? No one's, it's like that's what people want from us, because like our weapon software is in every combat situation I'm aware of. Now, maybe the more people with higher clearances are aware of some things we're not involved in. So, and people say, well, this should not have worked, and it did. And then on the commercial side, which is, I think, of great interest to investors, I mean, that's why we have, that's why we have a rule of 127. That's why we're growing 93% in the U.S. That's why our guidance is at 61%. It was at 31% last year, at the beginning of the year, something like that. So it's like, it's because we have a very tethered and deep and dense proximate relationship with the leaders in almost every field of industry. And last, adjacent to your question, but is like, and these relationships are not circular pay relationships in any way. It's like we provide value. Not that it comes up very much, but I used to tell people all the time, just imagine we're a Swiss company, but you have to pay us a little more. Like, we deliver a high value product. We don't want any BS about getting paid. We're not going to give you any BS about why our product didn't work and offer you a steak dinner or an event planning event. We're going to deliver, and then we get paid. And we got paid last year. A lot. 127, 70, 93. Those are my favorite numbers.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
When we are thinking about what we're building, we are building these things with our internal culture, our defense clients, partners, and with a great thought to people who have put their own money into Palantir. It's just a very important part of why we continue to perform and what motivates a lot of us here, and definitely me. And I hope that you are having a great time when you run into professional analysts who thought we would never be free cash flow positive, we'd never be profitable, we'd never have a 2-handle, a 3-handle, a 4-handle, a 5-handle, and now a 7-handle on our aggregate growth, and the rule of 40 was some unattainable category, although 127 is unattainable by everyone besides us. So I hope you're enjoying the ride. There's always ups and downs, and there are ups and downs for all of us. We've been doing this for a long time, but we're having fun tonight. I hope you are too. And yeah, congratulations.
Thank you. That concludes Q&A for today's call.
Don't go anywhere. We're going to wrap it up, unless it's the end already. I think that is the end. Well, it was a very, very macho presentation for comparing with the previous ones for Alex Karp. Did you like the numbers? Did you like the guidance? Do you think Palantir is still buy, or is it a hold, or is it a sell in your eyes? We are running a poll. We are running a poll in the chat. Won't be for too long. Just cast your votes in. I don't know whether you've seen it or not. There's a poll. Listening to the call, is Palantir Technologies a buy, hold, or sell? Or are you undecided? As simple as that. So we had a good. Obviously, we had good numbers. I just switched to the wrong scene, but once we are there, you can see that massive growth. The question is this going to be sustainable? Well, we got a guidance for next year and for the next quarter as well. And by the looks of it, it will be. And as I said in the before the call in the beginning of the show, I said the commercial revenue is the heaviest element now for Palantir to focus on for this quarter, and very likely for the next quarter as well. As you heard, Alex has not much to probably seed and harvest in Europe yet, so they'll be focusing mainly on the American market, as we could hear. But this was the most important and pivotal thing for this quarter, according to the analysts as well. So Palantir delivered. Palantir delivered once again. They delivered very good numbers. They delivered solid growth. And now they've started. We know that Palantir is overpriced. Me personally, I'm not buying Palantir now because it's probably too late. We hit the all-time high on the last earnings call on the third quarter. And then we had a massive slide of like 15% in just 2 days. So, and it never recovered. It never recovered to the level of $200. So, or 190 respectively. Me personally, I'm not buying Palantir, but I can see they are finally delivering value behind the price tag of the stock share. As we are closing the show, we had this nice reaction on the numbers coming out. We were up to 8% on the after the closing bell. In the after hours, we're about 8%. Now we are gradually selling off. Let's see the reaction tomorrow. What do you think? What do you think? Is Palantir buy, sell, or hold? Well, let's end the poll. Don't go anywhere. We have a few more minutes. If you have any questions, if you have any comments, fire them away in the chat. 44% think that is a buy. 20% undecided, 18% hold, and 18% sell. So, in general, 44 plus 18, that's 52. That's 62%. So that's good. 62% in general are positive on Palantir's position. And let's see if we have any more questions, any comments. By the way, what was his name? Dan, the second one calling in with his woolly hat. I mean, you are joining a multi-billion company's earnings call, the most important event in the quarter, and you are dressed like when you are going slaying, or it's just, it was weird. It was very weird, that woolly hat. Yeah. I might get one for next show myself. So let's just quickly catch up with the chat, and we're gonna wrap it up, and I will send you to the extra channel. Thank you very much for joining me. Those who haven't done yet, if you liked the show, if you liked my presentation, if you liked my new studio setup, if you enjoyed the analyst room, currently not showing anything, if you enjoyed the analyst room as well in the beginning of the show, definitely smash that like button and subscribe as well, because next quarter earnings call Palantir, we will be here again. And in the meantime, we are covering a lot of Palantir customers, especially from the advanced air mobility. Think of flying taxis, think of delivery drones, and more. So let's get quickly back to the chat. Let's catch up. We have 50% on the previous poll. We had 50% of long-term investors, 27% not invested, 14% trading, and considering, and 9%. That was the previous poll. Palantir is already taking all my information. I'm not giving them a penny, says Bob Chris. Fair enough. It's a fair comment. That Gaming was happy. Martin sent me. Good. If you know they are gonna go up, why not take advantage of it? That's Markoy Bal. I can't, sorry, the letters are very tiny. I can't zoom in, and the screen is like 3 feet away. So sorry if I'm reading your name incorrectly. I saw a couple of viewers, they opened a short position, so hopefully you took your profits, and congratulations. I ask you, what is your average? Mr. Thibault, he was there early doors with us, $12. Congratulations. That's massive upside. Congratulations. I am advisor 159.49 short, only one contract, but looking for a free beer. I think you're gonna get couple of pints from this. Dave Rahman joined as well. When we end up, we'll send you to the extra channel. Don't go anywhere. We'll wrap it up. Anyone seen that flash crash on SPY to $59? I didn't see anything. I checked. Got a new subscriber. Sorry, I missed you. It didn't come through somehow. I didn't see it on the chart. I checked it multiple times, and I checked multiple candles as well. I checked 1 minute candle, I checked 5, 15 minute. I couldn't see anything. So if you can be more specific, we can have a look. He was playing drums on the table. Yeah, Sab is here. Palantir keeps killing it every quarter. Yes, I agree, Sab. I agree. You are in Palantir, aren't you? You were there early days as well. Deno, we just going to ignore. Yeah, explain please what crash, because I didn't see anything. Javi is here. Thank you for joining. I love it. Dan Sab says, oh, Dan Ives got his woolly hat on. What's next? Yeah. Yeah, it was a bit bizarre. Diesel Raider is here. Thank you for joining. When will you sing live on the show? I would rather not, but I might if I get. Maybe on one of the shows when we do drinks and when we mess about a bit. I might sing a song. I think Martyn hates Palantir. I don't think Martyn hates Palantir. He just doesn't like the hype. He doesn't like the value behind the company. And we talked about in the beginning of the show, Palantir is currently not delivering the value behind the price tag. And this quarter was very important because now Palantir have proven, I'm not showing the right, sorry, I'm not showing the right camera. Palantir has now proven that they can deliver growing value behind the share, behind their share price. So next quarter, this could be much better and the earnings per share will be going up and the value per share will be much more interesting. Right, we had the last poll. Listening to the call, is Palantir Technologies a buy, hold, or sell? 44% buy, undecided 20%, hold 18, and sell 18. Admani Nyland. Hopefully I said it right. Sell the news. Okay, fair enough. See Marty. Just got in and I missed it. I will watch up later, Vaz. Doing an excellent job as always. Thank you. I love it. If you want to rewind back, you will see the initial analysis I gave you, and then we went through the actual presentation. There was a lot of info we didn't hear on the call. So we went through it before the call started. So if you want to rewind back, you will have all the information. Zach is here. Thanks Vaz for the earnings. Thank you for joining, Zach, and Diesel Raider as well. Martin, messages deleted. Thanks Vaz. Tony is here. Sab, thank you everyone for joining me. I love it. Palantir going to 200. Huge contract with ICE to surveil and capture illegals. Is it the rumor or what do you know? Tell us what you know and we can have a look into that. Right. Zach, Tony, Sab, love it. So let's have a look at the stock price again. 154, I think that will stay like this between probably 154 and 152 for the rest of the night, and then what happens on the pre-market, we don't know, but definitely the delivery was good. The numbers are looking good. The presentation was very mature as well. So if you stay where you are, I will send you to the extra channel. What is going on the extra channel? Let's have a look. The extra
discount, $3.
The extra channel, we are talking about I don't know. We are talking about stocks. We are talking about stocks or crypto. I don't know. Right. That's it from me. I will see you. I will not see you tomorrow. I've got meetings tomorrow. I'm talking to somebody. I'm not going to say anything. But you won't see me tomorrow. You will see me on Wednesday with... Martin is doing Google earnings on Wednesday. Tomorrow, Enphase. Tomorrow morning, Sensei, Martin, back again. And then after hours, Enphase Energy, Martyn Lucas himself. Thank you very much for joining me. I really enjoyed the call. Really good show from you as well as the audience. I will see you next time. Take care of yourselves and each other.